Hi guys, so today's video will be a little bit different from previous analysis I used to do. So today's video is gonna be how to use Fibonacci trading strategy. So that will be today's topic, guys, and how I use my Fibonacci trading strategy. So what is Fibonacci, right? I'm just gonna Google it for you guys to just see a very simple explanation. So basically, we use Fibonacci in our day-to-day life. Yeah, so and it can also be used in trading as well. So let's just see a little bit of history about Fibonacci. So we can see here, right? I just Google Fibonacci, right? And there's something we call the Fibonacci sequence, right? And what is Fibonacci sequence, right? We can see, so this is in mathematics, right? We can see here that in mathematics, a Fibonacci sequence is a sequence in which each number is the sum of the two preceding ones, numbers that are part of Fibonacci sequence, and there are different numbers that are part of Fibonacci sequences, and these are it right here. But this does not actually mean this is, but this is how actually how Fibonacci is kind of calculated. But like we know, we just don't use Fibonacci for trading. We can use Fibonacci in other terms as well. So we can see it says here the Fibonacci sequence is a type of series which each number is the sum of the two type precede it, right? So it starts from 0 and 1 usually. Fibonacci sequence is given by 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 54. 89, 144, and so on. The numbers in this Fibonacci sequence are also called Fibonacci numbers. So there are the Fibonacci numbers as well that also relate in trading, which I'm going to get into that. I just want to do a bit of like history on Fibonacci, just for us, for those that does not really know much about Fibonacci, right? And we can also see right here, so we have right here, why is Fibonacci so important, right? Fibonacci sequence is important for many reasons. In nature, the number and ratios in the sequence can be found in patterns of petal of flowers. We can see it can be found in different kind of stuff, right? Corn, stem. So they basically use Fibonacci as part of our life as human being as well. And you can also see right here, it says as the sequence continues, the ratio of the terms approach a number known as the golden ratio. So we also have something like that called golden ratio in trading, which we term as 61.8% Fibonacci level. So this is the golden ratio for Fib most of the time, right? Which is 61.8, just like I mentioned. So I'm just going to do one more quick one just right here. So basically, this is what we actually use Fibonacci for in trading. Fibonacci and trading. So what is that, right? There is something we call Fibonacci, and I'm going to show you in the chat. There's something we call Fibonacci retracement and Fibonacci extension. So basically, Fibonacci retracement and Fibonacci extension are the Fibonacci that consists of my Fibonacci trading strategy. This consists of my Fibonacci strategy. So basically, right, this right here is exactly what I use for my Fibonacci strategy. I'm just going to explain more in details, right? And just like we know, where does Fibonacci known, right? So the person that actually discovered was Leonardo Fibonacci, so which also have different names just for you to know for like history. So this is particular one, like I said, is most for like trading. So Fibonacci retracement, just like I mentioned before, are most common form of technical analysis. So basically, there are types of analysis you can do what trading, and I'm a technical analyst, right? I use Fibonacci. That is my main strategy. So you can see it says Fibonacci retracements are more common forms of technical analysis, right? Based on Fibonacci sequence, which I'm going to show you later on when I'm on the chart, right? During the trend, Fibonacci retracement can be used to determine how deep a pullback may be. So this one right here too, I'm going to explain that when I get to the chart, right? Traders tend to watch the Fibonacci ratio between 2.36 and 7.86. This is invalid for me, right? This is invalid because I use all my Fibonacci retracement, right? That is invalid. So just for you guys to know, there are different types of Fibonacci trading strategy out there, but I'm going to show you the way I used mine for those that just want to probably incorporate Fibonacci into their strategy, right? So now I'm going to go to the charts right now and use my Fibonacci strategy based on how I use it. I'm going to explain to you guys in more simple term than I will, right? And I want to put that out there, like all strategy works, right? Based on me, all strategy works. You just have to know all strategy works. Just focus on the edge of the strategy of the trading strategy you like / prefer. So I know this is like a very controversial topic right here when it comes to like the trading community, right? People think their strategy is the best. Mine, I'm not going to say mine is the best. I'm just going to say I've tested different strategies and I stuck with Fibonacci because I like Fibonacci. So all strategy works. You can implement if you have any strategy that works for you already, just go with it. You don't have to change anything. But there's nothing wrong in actually improving on the strategy you have. So if you have already strategy that is working for you, if you like Fibonacci, then you can incorporate with it as well, right? But if it's working for you and if you don't want to change it, that is fine as well. So this particular one is just for those that either want to start using Fibonacci trading strategy or they already have the strategy, they just want to incorporate Fibonacci into their strategy already. It works both ways. I just want to put that out there, right? So now let's go to the I don't want this video to be too long, so I'm going to go to the details of how, like I said earlier on, disclaimer, I said earlier on, there are different ways to use this Fibonacci tool. It is not just one way, but this is how I use it and it has been working for me. So if you guys want to see how I use Fibonacci, then let's continue and watch. Thank you. So let's say, so for those that is new that doesn't know where I am, this is a platform called TradingView, right? And let's see how you get your Fibonacci tool on TradingView. So how do you get the Fibonacci tool on TradingView? First of all, you go to the drawing section, which is something like this. I have it right here. You can see this is Fibonacci. So right here will be the drawing right here. So when you come and click on the drawing tool, you scroll and look for Fibonacci. So the one I basically use is called the Fibonacci retracement. So this is the one I use. It's called Fibonacci retracement. So what you can do is you can just start it. So when you start it, it becomes your favorite. It stores in your favorite, right? It stars in your favorite. So whenever you see this star right here, it means it's part of your favorite and it's something. And I would just recommend anything like you know you're going to be using consistently, you can just favorite it so you don't always have to go. So this is particularly the one I use, which is called Fibonacci retracement. So when you start it, right, when you start it, you should be able to see it at one of your toolbars. So this is called a let's see, this right here is called the toolbar, right, for all your favorite tools. So all you see right here are the things that I use frequently, and that is why I had them favorite. But we are not here for that, we're just here for Fibonacci. So this right here is the Fibonacci retracement tool. So how do we apply it? So before we apply it, let's just do a quick lesson on Fibonacci 2, right? So Fibonacci 2 is mostly used for a trending market. The Fibonacci tool is used when there is a trending market, right? That is when you use Fibonacci 2. Just for example, if you have like this, like this, like this, like this, like this, right? This is a trending market because we are seeing it. This is an uptrend right here, uptrend, right? We are seeing that we have this higher high, higher low, higher high, higher low. That is a trending market. For downtrend, an example for a trending market is just similar to that, right? Which means right here we have the lower high, we have lower high, lower low, lower low. This is the trending direction, whatever, or market, right? This is what we call the trending market. Because to use Fibonacci, you need a swing high and a swing low. To use Fibonacci, you need to have a swing high and swing low. I'm going to explain what that is, right? So for an uptrend, like I said, we need something like this, right? So this right here, let's change the color. This right here is the swing low for the uptrend, while here swing high for the uptrend. Because you need 2 points to be able to draw Fibonacci. You need 2 swing points. You need 2 swing points to be able to draw your Fibonacci. So you actually need 2 swing points to be able to draw your Fibonacci 2, which is 1 point here. So this right here will be point A, and this right here, or point 1, whatever you want to see it as, or point B, or point 2, right? To be able to draw Fib on that level, and I'm going to explain that further. So now let's go to a downtrend, right? Let's go for a downtrend. So for downtrend, it's just similar to the uptrend, right? So we need, this would be our swing high for downtrend, and right here will be our swing low for downtrend, right? Just like I said, point A or 1, point B or 2. So this is how it's gonna be for a downtrend, and I'm going to explain further to you guys using the purple charts, right? So now let's see, right? Let's use this as an example. Let me go to more smaller time frame that has more data, just for me to be able to use more data. Let's see the daily time frame. Okay, this is a good one. So for us to just see, so this is a daily time frame, right? It doesn't matter. So you can basically use Fibonacci 2 on all time frame. Let me write that. You can use Fibonacci tool on all time frame from the bigger time frame to the lowest or smaller time frame. And I'm going to show you guys how I do that, right? But let me just teach you guys how you actually plot Fibonacci, right? So now let's go and see, how do you plot Fibonacci on an uptrend? How to draw Fibonacci on an uptrend. So this is the first one I'm going to do right now on how to draw Fibonacci on an uptrend. It's really quite simple, right? As long as you know what your uptrend, your Fibonacci tool is, right? So this is how you do Fibonacci. Like I said above, you need 2 points to draw Fibonacci. So currently this is an uptrend. Let me just draw a trend line right here just to make it simple, right? So this is an uptrend right here, right? This is what we consider an uptrend, right? So how do we draw Fibonacci on an uptrend? Remember when I said earlier on that for an uptrend, we need to have a swing low and a swing high for an uptrend. So in this particular scenario right here, for this particular uptrend right here, right, where is our swing low right here? This is our swing low. This is our swing high. So basically you need the 2 points for you to draw Fibonacci, because now we are using Fibonacci to actually measure the retracement. We use the Fibonacci tool on a trending market to measure the retracement for entry. So basically that is how I actually use Fibonacci for, right? So we use Fibonacci tool on a trending market to measure the retracement for entries. That is what I use Fibonacci for. So I'm going to show you guys how you do that. So now you go to your Fibonacci tool. You're drawing from this point right here to this point right here. So if you first have the Fibonacci, this is how it looks like. Right, this is how it looks like. You can always modify it as you prefer, but this is how Fibonacci look like in default. In default, this is how Fibonacci is, right, in default. So we have this Fibonacci numbers right here, right? And I was telling you, so these are the Fibonacci numbers that sequence, right? So right here, we are seeing right here are the Fibonacci numbers / sequence, right, for the default. Right, this is what they have for the default. And I mentioned earlier on as well that Fibonacci are used in different ways, so people have different Fibonacci number based on the strategy you're using Fibonacci for. But I'm going to show you mine based on what I am doing. So like I said, I just wanted to, you guys, for those that does not know how Fibonacci looks like, this is how Fibonacci looks like in default, but you can always modify it based on how you like it. So I'm going to show you how I modify mine based on how I like it. I still actually left most of the numbers right here, right? I use most of all these numbers right here. I have this, I have this, I have this, I have this, then I just added some few ones that I'm going to show you guys. So now let me show you guys my actual Fibonacci. Now you can see the difference, right? But I just like this how it looks right now because it looks more cleaner, and that is how I like it. So let me open my Fibonacci for you guys to know, so you can see right here. Oh, I'm coming. So I'm going to give you guys few minutes for those that want to copy my Fibonacci number. Please do. So these are my numbers right here. Let's see. So these are my numbers right here. So this right here, from here, 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 here. These are my Fibonacci retracement. So this right here are my Fibonacci retracement number. Let me change the color. This right here are my Fibonacci retracement number, right? So I have the 0, I have the 0 0.23, 0 0.382, 1, 0 0.5, 0 0.618, 0 0.786, 0 0.886, right? While this right here, let me change this and this two right here are my Fibonacci extension. So this is how I basically use my Fibonacci. I need both ways to be able to use my Fibonacci for my strategy, right? I'm going to explain further. So now I hope you guys are able to, if I'm going to take this out now, you guys can just screenshot it or like copy it down, like pause the video to actually write it down if you choose to want to use my Fibonacci numbers right here. So as you can see right here, they had how to do it. So Fibonacci also comes with a trend line, guys. Okay, wait, let me do more explanation. I'm just going to make it as simple as it can be for those that do not really know much about it. So let's see. So let me just show you the method of modifying in case if you guys want to change anything. This is how I like it, but you guys can might like different thing. So first of all, Fibonacci level has a trending number, right? First of all, it has a trend line, right? But I deactivate mine, that is why it's not showing. But for those that might want to use a trend line on Fib, if I activate it, you will see where that comes. So let me activate it right here. Click here to activate it, and now you can see right here that there's a trend line now on my Fibonacci, right? You can see there's a trend line. You can come here to change the color. You can see, just when I do it, you guys can just watch here for you to see that it's changing. You can see it's changing, so you can basically change it to anything you like. You can also modify the number to line. You can see right here it has changed to line. If I change it again, it has changed to dash, right? If I change it again, it will change to dot. So now if you decide to want to use Fibonacci line, so when you see, so Fibonacci line from, let's see, wait, let me delete this one right here and just show you guys. So let's do an uptrend from here to here. You can see, so this line actually shows an uptrend right here, but if you want to do downtrend, you just flip it, right? So you can see the line is showing is a downtrend. So if you want to use line, you can use line, but I just don't fancy it, and that is why I removed it. But I want to be as basic as it can be, just for in case of people that actually want the line to be there. So that is how you can get the line and modify it, but I don't want it, so I'm going to non-mark it. So this right here, it's called the line, the Fibonacci line, right? Which means this line right here, right? I prefer mine to be these dots right here because I don't like it to be really crowded, and I don't like it to be really crowded because of based on my strategy. I actually drew Fibonacci on almost all my time frames, so I want it to be as thin as it can be so that it won't be really crowded. I'm going to show you guys on how I do it. So you can see, you can also change the line right here. So I'm going to show you guys. This is a tiny line right here. This is too tiny, and that is why I don't like it. We can see right here, this is tiny. You can also modify it. This is fine. This is another size here. This is another size here. This is the biggest size we have right here. And you can also have similar like the first one I did. Is it that if you like line, it can be a line, or it can be a dash, or it can be a dotted line. But like I mentioned like before, that I prefer it dotted because I draw Fibonacci in all my time frames. So another one day also you can also do is you can also extend it to the right, to the left or right, meaning if you want it to be full on your time frame, right, to the left or right. So I extended mine to the right because I like it to be like this based on the bigger time frame, just like I mentioned before, that because I like to draw my Fibonacci on all bigger on in all time frames. So if I extend it to the left, to the right, I can always see my Fibonacci numbers in all the time frame I go. If I don't, then sometimes I might not be. If I, for example, if I draw my Fibonacci on the monthly time frame, right, and if I don't extend it that long, I might not be able to see the figures when I go to smaller time frame, like maybe my 15-minute time frame or like 1 hour time frame, like 2 hour time frame. And that is why I prefer to extend it, because if you extend it, it basically just shows an all time frame, no matter how small the time frame is, and no matter where the time frame you actually draw the trend line on, you are going to see everything, right? But because I trade like this, I don't actually need to extend it to the left, but you can. So but you can see my right here is extended to the right, and that is why it's extended like this. So I'm going to show you when it's not extended. So let's check it right now. You see when it's not extended, my Fibonacci number is just right around here. You can see it is just run around here. So this is what I'm saying. Like if I draw my Fibonacci right here on the daily time frame, right, if I go to my 15-minute time frame, I might not be able to see this number popping out, right? And that is why I like to extend mine. So if you see right now, if I click on extend, you can see now it's now fits everywhere. So no matter what time frame I go to, it's going to show because it's extended through, right? So if let's just do the left one for those in case that just want to see the left. So you can see how the Fibonacci is right now without extending it to the left. So if I click on extending to the left, you can see now that it has now consumed everywhere right here, right? And that is all I said as well to that. That would just make you see overall everywhere on the time frame. But like I said, it's not that useful to me, and that is why I don't use it. The right is useful to me, the left is not, so I'm going to uncheck it because I don't use it. So now what next can you modify? Now this is like the number, like I said, you're just going to impute all this number right here, right? So now we have use one color, right? So you can change it to any color you like. Pink, you see it has changed color. It can change to yellow, green, whatever you like. I just like black because I'm using white background, right? So another thing again, it also has a background. You can see it has a background, and the backgrounds are just similar to it actually covering it. Let me just put it so that you can see. You can see for those that want a background on it, let me use another color. For those that want a background on it, that is if you use the color, let's use a red color, right? Then the background, this would be like the opacity of the um background color, just to know how transparent you want it or not. I don't like the background, so I don't use it. If you like it, you can decide to use it. I don't, so I just remove it because I want it as clean as possible, right? So there's another one right here that is called the reverse, right? Meaning from your uptrend to downtrend, you don't actually need it because you can always just swing it based on what you want at that moment. So this is just basically the reverse. So right now I drew it as a downtrend. If I click on reverse, it has switched to an uptrend, right? So yeah, now we have the price, right? So we can see right around this area right here is showing me the prices. So these are the prices right here at this bracket. So this one's right here that has this at the prices right here. So I want it to show, and that is why it's showing. Just in case if you don't want it to show, all you have to do is uncheck the price, and it should stop showing. As you can see, we've unchecked it and now we can't find the prices anymore, right? So personal preference, I like it, so I'm going to keep it. Another one we also have right here is called the levels, and the levels can be used for percentage of value depending on how you want it. So this is the value and this is the percentage. I prefer the percentage, and that is why right here, which is this one right here, we're seeing the 100%, 88%, 78%, 68%, 50%, and so on, because I put mine in percent. So now if I change it to value, let's put it to values, you see that it doesn't show you just put it in decimal values. So this one we have 1, we have 0.88, 6 we have 0.78, 0.68, 0.5, and so on. So this is how the value is for those that want it in values instead of percent. But like I said, I prefer the percent, so that is why I'm going to keep it right there. Just do it based on how you like it. So another one we also have right here is the label, right? The label, we have the right, left, and center, right? We have here right, left, and center, and we also have the middle, right? So right here is just where you want the numbers to be. Actually, this one where you want it to be right here, I prefer it to be at the right. That is why it's at the right. But let's just switch it to see. So if you see at the left, you can see now it has switched to this level right here. Right, you can see now it's switched to this level right here. If you want it at the center, that's switched to the center, right? Like I said, I prefer it at the right, so it's at my right. Now we have the top, right, which means where this digits will be, right? Mine is around and the middle of the line right here. So at the middle of the line, we can see that it actually aligns at the middle of the line. If you don't want like that, you can put it to the top of the line. So let's go to the top. We can see now that it has moved to the top, right? If you go to the bottom, we can see now that the numbers have moved to the bottom. So just do this based on your preference, guys. So, and sometimes, because like I said, that I draw my Fibonacci in not all, but most of my time frames. So sometimes I like to put one at maybe like the daily time frame at the middle, the bigger time frame at the top, so that it won't clash together, so that I'll still be able to see them. So I just do it based on how I need it. But as of right now, I'm just gonna leave it at the middle. So now this is the font. We can see my size is 12. This is what I would like. If it's too small for you, you can make it bigger. As you can see now that this is 20, this is bigger. So just personal preference on how you prefer it. I just prefer mine tiny. So basically that is, this one, let me see what this one do. This one doesn't do anything that much, though. It does not even check. So basically this is how you just edit your Fibonacci levels, right? Fibonacci retracement too, just in case. This is how. We also have something called coordinates, right? Which means just to coordinate from your point A to point B right here. So this actually means point based on the point A or B, based on what you are actually doing it for. So we can see right here, just to confirm, this right here is our point A, right? And we can see this point right here that it gives is our point B. And if you see, you can see the values right here tallies, the numbers right here tallies with this one right here, right? Let me just change the color of that. We can see this one right here, you value with this one right here. So it just shows the coordinate, just in case if you want to change it manually, you know where that is from, right? So that is that about that. Another one is the visibility. Like I said in my, like I've been saying, that I like to put my Fibonacci in all time frame. So not all time frame, most of the time frame. I'm gonna show you guys later on. So this is basically how you do it, for you to know on how to just use the visibility of where you want it to show, monthly, weekly time frame, based on how you want it. This is how you just do it, guys. So this is how you just edit your Fibonacci too. Hope this is simple for you. So now let's go to the main thing you guys want to watch, which is the strategy. So let's delete this one right now and see. So right now, just like I mentioned before, let's go back to my example. So guys, let's go to the strategy itself, just like I was explaining previously, right? So we can say this would be an example of an uptrend, example of an uptrend, right? So how do we draw the Fibonacci on an uptrend? I've said it earlier on, you need a point A for an uptrend, which is the swing low, and you need a point B, which is the swing high. So you're going to draw a Fibonacci for an uptrend from the lower to the highest. So you draw your Fibonacci for an uptrend from the swing low to the swing high. That's just a simple explanation for those that does not know how to draw it, right? So now let's take my fib right here. Gonna draw point A here to point B. As you can see right here to point B, that is how you draw your Fibonacci 2 on an uptrend from point A to point B. So now, right, why did we draw a Fibonacci 2? We're drawing a Fibonacci 2 like I said earlier on, to measure the retracement for entry. That is what I use. So I use basically my strategy, my Fibonacci trading strategy is to use the retracement levels for entry, right? Is to use my real level for entry. That is what I use it for most of the time. So now, how would you know where the Fibonacci level might retrace from? That is why you need more confluences, right? So let's just assume this was not there, right? Let's assume it hasn't gotten to this level right here. We just see the market start retracing. So as soon as the market start retracing, you get your point B, right, for you to draw the Fibonacci level. Because if the market doesn't retrace, then you can't draw your Fibonacci level, right? Because you need a trending market to be able to draw your Fibonacci level. Now, how did you know? If you ask a question for someone that doesn't know, how would you know where the market is going to retrace from? If you remember when I was reading off some of the importance of Fibonacci, the strategy said some people just look for 23% level or the 76% level to retrace from and enter. I actually did not, because I use all my Fibonacci retracement levels, just like this one right here. I use everything because I just don't base my Fibonacci levels off of just Fibonacci levels, right? I use it in confluence with the market structure and price action, and I'm going to explain to you guys how I do it, right? Just mainly before it actually retracing off of this level right here, which is the 38.2% fib level, right? Let's just assume it's not there yet, right? Let me delete that and let's just assume it's not there yet. Basically, based on the price market, if you know the market of the price market, right, if you know it really well, right, this is a significant zone right here. I can draw a zone right here just to show it's a significant area right here. And the reason why you draw the zone right here, that is a significant area, is because we can see around this area, we've rejected this area quite a number of times. So this is significant area right there. So basically, even without drawing my Fibonacci 2 right here, as soon as it's retracing down, my initial thought will be, I think it might start retracing off of this level right here. And the reason is because, one, this is a significant zone that I mentioned before. It's very sensitive. We've retraced there multiple times, right? And another thing is because we can see that is where we had our break of structure. So my BOS means break of structure. So we can see that we had break of structure and break of zone as well, and it hasn't retested the zone. So in normal price action, you just think that if it's retracing, it might push down here to retrace. So that is my first level, and majority of the time, right, it actually aligns with my fib level, and that is why I use fib. I'm just going to reiterate and say it again. I just don't use Fibonacci levels only. I use Fibonacci in conjunction with other things for it to solidify my entry. Do you get what I'm trying to say? So I just don't use Fibonacci level, right? So Now, if I draw my Fibonacci level back, right? Let's see from here to here. So now that I draw my Fibonacci level back, we can see that even mainly before drawing the Fibonacci level, just like I explained earlier on, this zone is already a significant zone for me. And now that we can see right here, that is my one confluence. It is around a key zone, right? So my first confluence to actually take this trade will be confluence to take this trade, confluence to take this trade, right? One, retest of a key zone. Two, retracing around my Fibonacci level, and which this one has becomes 38.2% Fib level. Just to say it again, I just don't use, or it has to retrace from 23 or 38 or 61 or 50% level. No, it can retrace from any level. As long as I'm seeing a lot of confluences around that area, then I'm okay actually taking that trade. So first of all, that is what I see, retrace around my Fibonacci level, which is, this just has to be 38.2. It can be any retracement level, just to reiterate that. So the third one I'm going to look forward to, because I like a lot of confluences, right? The third one I'm going to sit and look forward to is candlestick pattern around that area, candlestick patterns. So I need a candlestick patterns that now shows me that, okay, I'm gonna it's gonna continue to buy, right? Fourth again that I need is a sometimes, this is not all the time, sometimes, right, I would want some chart pattern, like chart pattern. And majority of the time the chart pattern I look forward to is just the M and W patterns. So these are like the confluences that I use to take my trade. And it doesn't have to be an uptrend. It doesn't have to be an uptrend. These are the confluences I use to take my trade in either direction, right? So it doesn't have to be an uptrend, guys. It doesn't have to be. So that is how I use and take my trade. Now let's see, like I said, this is the daily time frame right here. To take that trade around that area, I'm not going to take my trade in a daily time frame because I am an intraday trader, day trader slash scalper sometimes, right? Sometimes I'm not going to take my trade around daily time frame. So now, based on what I just showed you guys right now, let me go to my smaller time frame that I want to take my trade on. Go to that particular zone and see that you're going to find one of the confluences I listed. So let's just push back and see. Okay. So now guys, you can see what I'm talking about, right? So if I go to the smaller time frame, so I take my entry depending on if I want to scalp or intra trade. I take my entry around 15 minutes, 30 minutes, and sometimes even my 45 minutes, depending on how the price the price action around those time frame and the one that I feel comfortable taking my trade off of. So these are like my entry time frame for intraday trader. So now let me just continue what I was talking about, right? So as you can see right here on the daily time frame, I knew this is like an area right there for me. Like I said, my 38% fib level. Now what do we see that will make me actually take this trade, right? Make me take this trade is because I have three confluences. Let me show you the confluences, and it's part of the list of the confluences that I had based on what I said I saw, the last one I wrote. So first of all, number one confluence to take this trade, right? So I'm going to do, if I like, if for example, if I'm like in a live market, right, my first confluence is one, like I said, key zone. Number two, fib level, which is my 38.2% fib level, 38.2%, right? And my 3 level right here is chart pattern, which is the W pattern. You can see right here. And we know the W pattern, also known as double bottom, is a reversal pattern. We know that, right? That is a reversal pattern. So that definitely will make me take this trade. I'm going to write this trade, right? And we can see right here, right? To be safe, so there are different kind of entries. They're like conservative entries and like the aggressive entry, right? To be more conservative, right? Some people might take the entry around this area right here to ride to the upside, right? But to be much more conservative, right? You might wait. If you want to be conservative, wait, let it break this previous high for you to know that the trend has changed from a downtrend to an uptrend. Then you can see after moving right here, I see this beautiful engulfing candle right here. I might take the trade right here. So if you want to be conservative, right, just like I said, if you want to be conservative, this would be an entry for a conservative trader. Then if you're an aggressive trader, this will be an entry based on the confluences I listed earlier. So you see right now I'm going to take that trade based on that confluences I see earlier, which is 3 solid confluences. So the higher the confluences you have, the probability that your trade is going to work out. So I really hope you guys understand the concept of how I trick my trade and Fibonacci trade. I just don't use Fibonacci level. I use Fibonacci levels in conjunction with other things, which is the market structure and price action. That is how I use Fibonacci level. So that is an example for a buy. Hope you guys find it helpful, guys. And if you do, please, if you're not a subscriber yet, just subscribe to this channel and I promise you lot of nugget. As long as it's Fibonacci trading you want, that is what I do. So you can see right there, that was how I trade, and that was a good example of a buy on how I actually use my Fibonacci level to actually take trades and execute trades, right? So now, when you say, oh, how do you now look for your how do you now look for where you will take profit off of, right? I use my Fibonacci. So all right, I use Fibonacci to take trades and exit. So basically entry, right, and take profit. So how do I use Fibonacci to enter and take profit? And I've explained how I use Fibonacci for entry. So definitely this will be my entry right here based on what I explained earlier on. And how do I take profit? I take profit off of what they call Fibonacci extension. I take profit off of Fibonacci extensions. And there are different Fibonacci extensions, but just in case of people that have been watching my videos, right, my Fibonacci extensions are these two right here. My Fibonacci extension, so I'm using mine because this is my strategy. This is the strategy I use. It's not basically mine. I didn't come up with it, right? But this is what I use. Like I said, people use different Fibonacci numbers, but my Fibonacci extensions are 1, negative 27% fib level, 2, negative 61.8% fib level, and this is mostly my TP1 and this is my TP2. That is what I use. That is basically how I use to take that is my TP area right there, right? So this is it. This is how I do it. So if I take my trade, I'm gonna take my trade. For those that haven't know how to, maybe if you're new, let me just explain. If you're new on how to take trades, you come to drawing, you go to drawing on trading views, right? Then you go to your position area. Your position area. So this is your position area for you taking trade. I'm just saying this for those that are new. This is long and this is short. So your long is if you want to buy and your short is if you want to sell. So these are the position for you to actually take your trade, just in case for those that are new, that doesn't know much about trading view. So right now, because I want to buy, I'm going to take the long position, put my trade here, put it to my next Fibonacci level or a lower high, right? Then write my trade to my first TP area right here, which is here, right? My first TP area right here is here, right? That is how I take my trade. Then most of the time, and I'll be honest with you guys, most of the time I take my trade off of my 61.8% fib level. And the reason is because these two extensions area, this Fibonacci extension zone, are mostly reversal zones, right? Which means that most of the times when we get to my negative 27% fib level, there is a possibility that we might retrace around that area because they are reversal zone. So sometimes it might retrace a little bit to actually eat to my TP area, CP2 area. But because I'm not always greedy in the market, I take the market, what the market gives me, I take and I leave, right? So most of the time, I just prefer it to eat my TP1 because most likely, I'm telling you, like, and this is the reason why I stuck with Fibonacci levels and strategies, because most likely if you are in the direction that is meant to be gone, right? If you're in the proper direction, the correct direction, most likely, I'm telling you, it will eat your negative 27% fib level. I guarantee you that most likely, like I said, no 100% strategy out here, but I'm guaranteeing you, if it's the direction that is meant to go at that moment, if it's this direction you actually took the trade on, there is higher chance it will get to your negative 27% fib level. And that is why I really like Fibonacci extensions for my TP, because most of the time it gets to that TP. If that is the correct direction it's going for that day, I'm saying it again, most of the time it gets to my negative 27% fib level. And that is the reason why I like to just take my trade off of my negative 27% fib level and just be done with the day, because I'm a intraday trader, right? I'm just done with the day. But there's always an instance whereby I let my trade goes to my TP2 area. And the reason is because, my only reason is because if it gets to my negative 27% fib level, so now for example, now we're using a buy as an example. If it gets to my negative 27% fib level, right, and I still see momentum of buy, then I can be a little bit more confident to leave it for it to actually rise to an uptrend, right? To continue to rise to my TP2. But like I said, most of the time it doesn't. It just retrace. After retracing, it might get there after retracement. But sometimes I just don't want to give the money back to the market and let it go back. I just rather take the money. I might take the money, and if I still want to trade again, I might take my TP out. I might take the trade, right? Take my TP, leave the trade. Then when you retrace, then I might re-enter again, then probably ride it to my negative 27 again or my 61.8% level based on how I feel on the re-entry of the market. I might do that, but why would I give the money back to the market, right? Most of the time I do. If you hit my TP1, I just take my money and leave, right? So just to inform you guys, right? And you can also see there's an example right here of what I just said right here. We can see that as soon as we continue to push to the upside, as soon as we push to my negative 27% fib level, what do we see? We see a retracement to the downside, right? So most of the time, I'm telling you, around that area is a retracement level. There's an higher chance it's going to reverse, right? It might still get up to my level, but it's mostly going to reverse. We can see that it reversed, then we still hit my negative 61.8% fib level, then we reverse again, then we went up again, right? So those are just my levels for my TP area, right? I don't go more than that most of the time. So that is how I use my Fibonacci levels, guys. So now let's do an example for a sell. It's definitely the same concept, but I know some people just want to see, right? Because it's better off you saying it sometimes than just doing it sometimes than just saying it for easier understanding. But certainly it's just the same process. So now I'm going to use my fib. So for a downtrend, you use your fib from a down for a downtrend. You draw your Fibonacci to from swing high to swing low. So that is just like vice versa of on uptrend, right? Swing high to swing low. Basically, that's what we do. So now let's see. So this is the example we are going to be using. Let me draw a trend line right here just to use the example. From here to here. Right here. So now let's take my example right here from swing here to swing B right here. So now this is an example of the downtrend right here. So if you're going to say, how would I have entered a trade right here, right? Simple, the same concept that I use. Like I use my trading, it's so simple, guys. Like simplicity is the key when it comes to trading. Just look for what works for you, right? Like I used to say, let's just have that there is no, let's assume there is no fib level right here. So let me delete this first and let's just assume there's no fib level right here. What are the key areas I'll be looking forward to, right? So if you can see right there, the key areas I'll be looking forward to is certainly right around this area right here. So let me draw a zone. And what is my reason for that? My reason for that is because we can see that this is a significant area right here. We've recarried this area multiple times. Oh, let me exclude this one right here, because this is our example. So we've recarried, even this one did not touch it, which I get, right? But we can see that it almost got there and retreat back. So this is a significant area that I just see that, okay, there's a possibility that when it gets to that level, there's something that might happen, right? So now let's see. We can see that we actually broke this zone right here. It came to retest the zone, came up here from the W pattern, right? Which I said before is a reversal pattern. We can see it pushed there from the reversal pattern, came down here right here, broke the zone around that area, retested that zone, came down again, give possible rejections around that area, came down again. So that just signifies that there's a possibility that whenever the market actually gets to that level, there's a possibility that it might reverse again. And I'm using the word possibility just because of you don't know what the market will do. Always remember that just because the market has got into a certain zone and it has rejected around that zone multiple times, that doesn't determine that the market cannot break it. It can usually break it, but based on that, we can just, based on, as long as it hasn't broken it yet, we can just use our pyro price action to determine that, okay, the market has actually gone to this level multiple times and it hasn't broken that level yet. Is there a possibility that it might not break the zone? Yes, that's a possibility. So that's the significant area you have to look forward to be able to know that, let me see, maybe this time around the price action is going to break out of that zone, or is still going to retain, and it's still going to retain the same momentum it has been doing previously, which is when it gets to that zone, there's a rejection around that zone. And what actually makes that a thing for you to know is your pattern. So your chart pattern, weak rejections, will determine that, okay, I don't think it's going to break that zone. It might just continue to fall down as it has always been doing, right? So those are like the confluences you will use. So normally that is what you will be using and be thinking of, right? That, okay, right around this area right here is a significant area. So if you see the market actually tanking to the upside, what will be in your mind? The first thing in your mind will be this zone right here, because we can see, but you use your pyro actions to actually determine the future. in especially the chart. Is it always guaranteed? No, but at least you need a stepping stone to know what next, what things you want to actually work on, right? So initial thought you'll be thinking without even the Fibonacci level, just basically using price action, right? This is it, and I've explained my initial thought, right? So now that you use your Fibonacci level from point A here to point B right here, so point A here, we can see right here for point A to point B right here. Now what are we going to be looking for? Just the same method, guys. It's actually just the same method. Now we can see that this has become invalid right here. So just take our entry right here. We are using the Fibonacci to measure the retracement. To measure the retracement of your entry, right? Retracement of your entry, right? So now that the market is now pushing to the upside, so like I said, that is what I would have initially thought even before drawing the Fibonacci level, right? This zone right here, and we can see right around this area, this zone is in the midst of these two Fibonacci level, which is the 50% level and the 38.2% level. Right, so what would I have done in this scenario, right? I would have been patient and wait for how the market is going to react around this area right here, right? Around this area right here. So this right here will be my first point of interest, right? Point of interest. So if that becomes invalid, that means I'm going to look forward to the candlestick coming around my 38.2% fib level. And if I see confluences for me to take that trade, then certainly I'm going to take that trade and ride it to the downside, right? But if I don't see any confluence around that area, then I'm going to X this area because this has now become invalid. Then my second point of interest will now be my 50% fib level, so that will be my point of interest too, right? And we can see that that is where we actually came up here, we tested around that area right there, right? We tested around that area. We can see right here we tested around that area right here. So I would have taken this trade. I can, right? Because like I said earlier on, this is a bigger time frame, daily time frame, so I will have gone to my smaller time frame. So how would I enter this trade? Just like I said, I'll go to my smaller time frame, right? So how would I have taken this trade? I would have taken this trade like this, right? To be honest, I wouldn't have taken my trade off of this 50% level on a smaller time frame just because of how the market looks, right? I don't like how it looks. So I probably wouldn't have taken the trade around that area. How would I have taken the trades, to be honest, right? I would have waited for more confluences to actually take the trade. One confluence I would have waited on is like giving us the lower high right here. We can see right here giving us the lower high. As soon as we see this right here, I would have just put a trend line right here. I knew already that I was looking for a sell, but now how will I have taken an entry? I will have put my stop right here based on this reaction of this trailer right here, and I'll have to look for an entry right here. So as soon as we see multiple rejections around this area giving me this M pattern, I won't have taken the trade yet, to be honest. So if you have a counter trend line right here based on what you are seeing right around this area, we can see that this candlestick right here, broke this counter trend line right here, right, with this bull engulfing candle. So I knew there's a possibility that the market can continue to trace to the downside. So what would I have done is I would have been patient for the market to actually come up to around this area right here to fill the imbalance around this area here for me to take the market to the downtrend, because overall in my bigger time frame I have already initiated that I'm looking for a down move based on how the market's reacted around the 50% fib level. Now I'm looking for an entry. Like, you know, like the market is not always that smooth all the time. Like, you don't, like the previous analysis I showed you guys, example on the buy, that was an easy one to actually take trade on, but this one needs to require more patience, and I'm really happy that I chose this example right here for the sell, just to know that the market doesn't just go very easy most of the time. You have to be patient and use other different methods as a confluence to be able to take the trade. So now that I've actually initiated that my bias for that day is going to be sell. Then now I'm looking for a sell, right? I wouldn't have entered a trade around this area right here. That is crazy, because I would have using a lot bigger time frame to enter a trade around this area right here. So that's a no, you shouldn't do that. What I was doing is certainly I was expecting a retracement around that area right there. So as you can see that this is a key zone right here to actually have a retracement of, because we can see we broke structure around this area right here. We have a trend line break, we broke structure, and engulfing candle. So confluences to enter this trade. So guys, I'm just showing you guys how I basically trade, right? Break of trend line, break of trend line with an engulfing bear candlestick, right? Two, we have break of zone, break of structure, which is right now. We came back. The market came back. Let me see. Okay, the market came back to retest the break of structure slash fill in the field in the imbalance. So this will have been my entry right here, guys. So these are the confluences I will have using to enter the market. So if you have seen and noticed how long I have been, how many confluences I have been having. Like I used to have like 3 or more confluences. So this is actually the 3 confluences for me to actually take the trade on a sell, right? And don't forget, on a bigger time frame, right? Fib level retracement, right? So those are like the confluences I like to use to take my trade, and this is the all I've taken my trade. These are the confluences, guys. So where will I have entered this trade? Yeah, after this, we can see that after we came to this break of structure right here, right? We came to this break of structure right here. We tested around that area and give me this beautiful candlestick. I will have entered my trade there. So now I go to my position candle right here, put my TP a little bit up to this level right here, and probably write it down. So maybe around this area, but I will have used my Fibonacci level, to be honest, because like I said, I like to use Fibonacci all time frames. So I'll have just put my Fibonacci here for point A here to point B. Let's see, from here to here. And we can see on my mini Fibonacci level 2, we are retracing off of my 78.2% Fib level, right? So those are like confluences again that I have. So I'll have taken my trade run around that area to my negative 27% Fib level. Let me change the color of this Fib to this level right here. Because like I said, that's where I used to take my TP and I just leave the market. I'm not that greedy because you already have enough, right? So this is almost 2:1, right? Or almost 3, right? So I'm just taking my trade off of that level right here, right? And leave for more aggressive one, right? For more conservative, if I want to be aggressive, I might just put my TP on my Fibonacci next level, which is here. My TP around here. To be more conservative, then I write it to my negative 27% Fib level. That is how I will have taken the trade, guys. So basically this is how I use my Fibonacci trading more, right? So hope you guys find it. So this is what I do. I don't think there's anything I want to explain right now. I still have another video that might come up on my Fibonacci, maybe part 2 of my Fibonacci trading strategy, right? But it depends on how this market or how this video do, guys. Depending if I see a lot of people actually liking this video, watching this video, sharing this video, and I see a lot of engagement on this video, then I might probably do my part 2 of my Fibonacci retracement level. So guys, if you want to see a part 2 of this strategy, right, please make sure you subscribe if you haven't. Make sure you share to your loved ones that is into trading. Make sure you like, make sure you comment down below right there, and let's interact. If you have any question, just put it right there in the comment section below, and I'll do my possible best to answer with the best of my ability, guys. So basically, this is how I use my Fibonacci trading strategy, guys. Like I said, if you want a part 2 of this, that will depend on the engagement on this video. So please help me so that I can be able to do part 2 of this strategy, guys. So this is my Fibonacci trading strategy, guys. Hope you guys find it helpful and insightful. Please, and I'll see you in my next analysis, guys. Thank you for watching. Bye.